So I think a lot of traders, they make the mistake of staring at their P&L all the time and always focusing on how much money they're making, but they're not really concerned with, are they executing their plan properly? Right? Are they trading properly? Are they following their system? And that's where the profits come from.
Welcome to another episode of Tradervue Conversations, a podcast done with real traders sharing their knowledge and experiences. I'm your host, Richard Dalder, and I hope you enjoyed this conversation. All right, so hello, Kris. Welcome to the first edition of Tradervue Conversations. We're happy to have you here. And yeah, how are you? How's it going?
Oh, I'm doing well, enjoying my Easter long weekend. How about you?
Doing good, thank you. So we're really excited to have you here. So yeah, let's kick it off. I mean, tell us a little bit more about yourself. How did you start trading and what markets do you currently trade?
Right, so I got back in trading in 2017 and I transitioned from a sports betting career. So that's where I was, making the majority of my money for about 10 years. But things changed in the sports industry and then COVID hit. So I had to transition to something else. And that's where I picked up stock trading. And initially I was a long side trader, but I didn't find as much success with that. So I switched to short selling. And ever since then, it's just taken off. So about 5 years now. And I've had the same strategy since 2018 or so, just developed and perfected those. So I'm really excited about how we've come along, especially in this year. We've really refined our strategies.
Nice, it's interesting. And so, Kris, I know you're big on tracking statistics, hard data, and also like building edge and actually executing strategies around that. So how would you best describe your edge?
Well, our edge is derived from the databases that we track. So from the numbers and the statistics that we run analysis on, we're able to find mathematical edges that we can execute and apply to the markets and make money with consistently. And honestly, without that, we wouldn't have the conviction to put real money on these trades because we would just be guessing. A lot of traders, I think, are of the discretionary kind, and they're just kind of playing patterns, technical analysis, tape reading, and those things. I'm not saying those methods don't work, but I think there's a lot of gray area and it takes a lot of experience. So the beauty of a discretionary approach or a systematic approach is that you can just apply it directly to the markets. You don't need much experience or screen time. And I feel like you can make money right off the bat.
Yeah, no, and that's actually really refreshing. I would like to get a little bit deeper into that and how you do that, if that's okay. Because it's really, and for what I understand, there's a lot of different approaches to the market, and there's not like right or wrong approach. Is kind of finding what best works for you, if that makes any sense. And so with that being said, could you walk us a little bit through your process in actually getting deeper into what you see, and how do you go about building a database, getting hard data, and then actually putting strategy together that you can execute systematically?
Right. So what we do is we try to find the raw historical data from some sort of data provider or source, like Polygon is what we use. And we use Python scripting to extract that data. And then we extract it into Excel. And then once we have a database, we can run formulas, and we can use mathematics, statistics to analyze the data and try and find a statistical edge. And this is something I largely teach in my class and in my courses. And the beauty of this approach is that it doesn't really take much technical skill or trading experience. If you can find the mathematics that work in the market, you just apply the trades, and they're very easy. It doesn't take a lot of tape reading or entry skill. You just enter at a certain point, you exit at a certain point. It's very binary, so it's so easy to apply, and that's why beginners can have success with this approach. So I'm very satisfied with how we've come across in 2022.
Nice, it's very interesting. And so I also know that you're a big on execution. One of the things I believe you have in Twitter in your description is that execution is everything. So tell us a little about how did that, how do you got into that conclusion, and how exactly do you also take action based on that?
Right. So like I just mentioned, that's what we're really focusing on in 2022, is focusing more on our execution versus the P&L or the profits. So I think a lot of traders, they make the mistake of staring at their P&L all the time and always focusing on how much money they're making, but they're not really concerned with, are they executing their plan properly? Right? Are they trading properly? Are they following their system? And that's where the profits come from. If you focus on that first, the money will flow in as a result. So that's our approach. And that's what I learned throughout my career over the years. I learned that the less I focused on how much I was making and the more I focused on how well I was trading, I tended to do better. And I could find myself having a red day and not feel bad about it because I followed my rules. Whereas most traders would have a red day and they'll feel bad. They'll have a green day and they'll feel good, even if they broke the rules doing it. So you have to rewire your brain in a way to reward yourself for following the rules and punish yourself for breaking the rules, despite what your P&L is. And that's a very difficult thing to do.
Yeah, definitely. It kind of reminds me of a book called Atomic Habits from James Clear. There's a part in which he mentions, I think it was something like that. Focus on process and results will follow.
Yeah.
And yeah, like a lot of people, like you mentioned, a lot of aspiring traders, at the beginning, they're focusing more on P&L and kind of judging the day based on how they end either up or down on P&L. And it should be more towards execution. I do agree with you. So I'm guessing, Kris, that your historical background in sports betting kind of gave you a more analytical background into the markets. So can you tell us a little bit about how you kind of combine, or how do you mix those two?
Right. So in sports betting, it's basically the same approach. We would get the data from, sports sites like statistics, team history, trends, those types of things. And then we would try to find edges based on, what has happened in the past, because history will repeat itself. So in stocks, you basically just get stock data from the market and try and run analysis on that. And the same formulas that I would use, I was using Excel for over 10 years in my sports career. So it was actually very easy for me to transition into stocks because it was all the same things. The numbers were the same. We were just applying it in a different way. What I found was the most difficult was actually executing the trades, because if you place a bet on a game, as soon as it's placed, your job is done, right? You can't really do anything. But when you're trading, you have all kinds of room to interject and sabotage yourself if you don't have your emotions down. So that was the thing that I had to learn, is controlling my emotions while in a trade. So those took a few years to kind of perfect, but once it did, then it was very easy to apply my skills from sports into stocks and make, considerable amount of money.
Nice. It's very interesting. And okay, so what if, for example, let's say that I'm a beginner trader, I'm just getting into the markets, and I want to learn more about how to approach the market with this type of a perspective, or with this approach. How do I first get involved? What are the first steps that, like, myself as a beginner trader should take into, for me to get my hands dirty with an approach like this? Hard data, more statistics, because usually this is not the first, when you come into trading, kind of the first things you see, it's indicators, it's technical analysis, and that's kind of the normal approach, and probably the most commercial approach, if you will. So what is the first step, or how should I what is the first step as a beginner to get more involved in that type of approach?
Right. Fair enough. I mean, I think it's very difficult to get into this approach right away because it's more abstract and it's not, commonly accepted in the trading community. So even to this point, I'm still having to convince people that what we do is, successful. But if you're a beginner, what I would say is improve your Excel skills. We use Excel, spreadsheets and formulas on a daily basis. So, I was self-taught with Excel. I learned everything online. I didn't take any courses. You can learn everything for free. Just do the research, put the work in, improve your skills there. And if you are able to, improve your coding skills, because a lot of what we do is extracted with scripts like Python. So if you're able to code or know someone who does code, you can extract the information a lot easier from these sources like Polygon. There are some paid sources as well where you don't have to learn how to code, but it's just better if you can do it yourself. It just gives you more opportunities and freedom. What I did when I first started trading was using Trade Ideas, because they have a back testing service. So I was able to back test certain ideas and see if they worked. And from that, I was able to get the data to extract into Excel. And from there, I just kind of used my sports betting templates to run formulas and back testing and probability analysis to see if there was an actual quantifiable edge from the data. And what I found, Richard, was actually on the short side, there was such a strong edge on shorting these parabolic small cap stocks or shorting gappers that were up 50% or more on the day. If we were just to short it at a certain point, hold it with a wide stop, and then cover at the close, the profits were coming in month after month. Whereas on the long side, I was not able to find really any consistent strategies.
Okay, wow, that's interesting. Okay. So moving a little bit into another topic or subject, can you tell us could be a best and or worst trading experience, and maybe what do you learn from it in your years of your trading career?
Okay, I've got a few worst experiences, though. They'll stick with you for years, I'll tell you that. This is probably my second or third year into short selling. I was growing a small account. I think I started with around 5 or 10,000, and I grew my account up to around, I think it was 80 or 90,000. And I found myself in a short position on a stock GBR. And it's an energy play that's recently been running. So whenever that ticker symbol comes up, it reminds me of this painful memory that I had a few summers ago. And what I did was I was shorting the stock, and instead of respecting my stop loss, I decided to swing it overnight because I just felt like it's going to come down. I don't want to cover here. I was down like 30 or 40,000. And I just remember I didn't sleep a minute that night. I was so anxious and nervous the next morning. And when I woke up, I found out that it was gapping up huge. And I was, my account was completely blown out, and it was actually a negative balance where I owed my broker money. So it was a very dangerous situation that I put myself in. And, you learn the most from these painful experiences. I think as a trader, you have to have those like gut wrenching, painful experiences, so you learn not to do it again. Because, if I never had that experience, I probably would have learned later down the road not to do that. Respect your stops, don't swing positions, especially when, you're in the red. And yeah, so my broker had to close me out of the position. My account was, totally blown. And that was really tough to swallow, but
wow,
I learned from it, overcame it, and obviously recovered. I'm here now. So
yeah, no, I mean, wow, it sounds tough.
oh yeah,
but
it was tough.
And moving forward, what maybe did you apply to, what did you change for you to not have that experience again and be able to, kind of continue with your trading career? Because most, a lot of people could actually call it like, after that experience, some aspiring traders could not like get back into the market a little bit, or they could even get scared about putting a position after that. So tell us a little bit more about what you did or what learnings you got from it.
Right. Yeah. So like a traumatic experience like that can really hurt your confidence. And it definitely did for me because, I was grinding up a small account, and I was really, putting some green months together, and then having it all lost in one day is really demoralizing and hurts your confidence. So I took a few months off. I needed to recoup some money as well, but I took a few months off just to, to process things. And when I came back, I started using hard stops. Right? I didn't let things get out of control anymore. And I covered all positions at the end of the day. I didn't risk swinging it because that memory was so painful and fresh in my mind. I would always think, I don't want to have that happen again. So better just get out and play it safe. And I think, you need those experiences to kind of shape you and mold you and help you grow as a trader. Otherwise, you're just going to be reckless, as I was as a beginner trader. I was just trading very recklessly, but now I'm very controlled and a lot more disciplined than I was before.
Definitely. No. What about a best experience? Can you recall a best experience? You probably have had also like a few of those, but is there any like good moment on your trading career that kind of pops into your mind?
Well, I've had several moments, like kind of aha moments, where I felt like I had made it, or I felt like I had realized something that took me to the next level as a progression as a trader. And I would say, honestly, this year has been that kind of moment for me. The entire year, like when I started this 100K account challenge back in December, it was because I had been going sideways for several months, struggling to adapt to the post-COVID market. And I felt like I needed a mental reset. I needed to improve my execution. And so that's why I emphasize my execution on my daily P&L posts. I feel like most, transparent Twitter traders, they don't say anything about execution. It's always P&Ls, charts, stuff like that. So I felt like I wanted to emphasize that. And even in my chat room, guys are doing that themselves, right? They're focusing more on their execution. That's what we discuss in the room, not so much how much we made today. All the rules, did we follow the system? And as a result, guys are really successful and making progress as a trader. So I would say this entire year has been that kind of feeling for me. I just feel like a better trader, a more disciplined trader. And, I'm excited to see what the rest of the year holds.
Yeah, definitely. So Kris, a lot of friends of mine, traders, and also I can see it on Twitter and also in other social media spaces are kind of struggling to adapt to this pre-COVID market. And I'm sorry, yeah, pre-COVID market or post-COVID market, I'm sorry. And so what I'm trying to say is that what have you done in order to adapt to this market environment? Because it's definitely not the same as it was in 2020, 2021. I mean, we definitely had like a huge run 2020 because of all this quantitative easing and all the monetary situation and central banks and all this stuff. And so, but also 2021 was kind of like a good year and kind of the same direction, but also kind of moved sideways kind of the last half of the year. So can you share with us a little bit of your observations and also what have you done in order to adapt to these market conditions?
Right, good question. This is something that we've actually worked a lot on because we noticed a major shift in the market after around March of last year. We feel like the organic liquidity in the market has dried up and we've seen more manipulation and basically more fierce competition, especially in the small cap realm. Like, who are we competing against? And it's not those, stimulus check people anymore. It's more, experienced traders, guys who have made it through that period, maybe algos, hedge funds, tougher competition. So we had to step our game up as well. So our main approach is basically trying to avoid those manipulated stocks where it's basically a 50-50. The higher volume ones, over 100 million shares a day, ones that are clearly algo controlled, we're trying to avoid those as much as possible and stick to lower volume plays, under the radar plays, or low hanging fruit as they call them, because those plays are not going to be as crowded. They're not going to be as trappy or manipulated, and they're going to have a better read or feel for what's happening. And I think a lot of traders are struggling because they're still trying to fight those crowded stocks and trying to find an edge when the competition is so tough. It's like, whose money are you actually taking?
Yeah.
You're trying to take the money of traders who are probably better than you, or probably have more resources than you, or more information than you. So, my philosophy is probably the same as poker players. Like, you don't want to play against the sharpest players. You want to play against the fish or the tourists, right? The people who don't really know what they're doing. And so what we're doing is trying to focus on lower volume plays, plays that are not crowded. Like, if you notice, I didn't trade Viru much lately, or a lot of these crowded stocks that people are having trouble with. And I think that can do a lot of good for your trading as well, because you're not going to be burned down mentally with all the manipulation and all of the, the traps and things like that can really fake you out. With lower volumes, there's less algo presence, and I feel like it trades more clean and more organically.
I like that, what you just mentioned, like, whose money are you taking? I think it's a really valid point you're making, because sometimes we think that we don't even think about who are we taking the money from, but like trading is actually money moving from one hand to the other, right? So it's a good question to ask. And probably if you're going to be trading something that it's crowded, like you just mentioned, you're going to be against kind of the most sharpest traders out there. They have more resources and they have been also adapting and doing their homework. So I think it's a really good point. And so getting a little bit more into the trader mindset, Kris, and I think your execution, it's part of this, but getting more into the trader mindset, kind of the growth mindset. What do you do in a daily basis to improve as a trader, or also as a person? Because I believe both of them connect and they relate one to the other.
Right. Well, good question. I think for what we're doing in 2022 is emphasizing execution. So that's what we try to track every single day, right? I'm not staring at my P&L all the time. I'm trying to think, all right, am I following the plan properly? Am I sizing properly? Am I holding properly? So
Mm-hmm.
every action that I take during the day, I ask myself, is this, keeping my execution high, or am I sacrificing it for what I'm about to do?
Mm-hmm.
I base all of my decisions on that. Tracking things religiously, like P&Ls, trades, entries, exits. We track everything to keep ourselves accountable. And
Mm-hmm.
also in the room, what we have is a group Excel file where we can share our trades publicly within the group to kind of hold ourselves accountable, and to be accountable to your peers, and also have support from your trader buddies. I think that helps a lot. Um, Other things is like just lifestyle choices, trying to eat better, go to the gym
Mm-hmm.
more regularly, just show discipline in other forms of your life.
Mm-hmm.
And that will help translate in your trading.
Yeah, I do believe that also bleeds either positively or negatively into your trading for sure.
Yeah.
I'm curious about what do you track in your executions? I think I've seen an example before. I think through Twitter. What variables do you keep in this execution sheet, or what things do you track in order to get better and improve as a trader?
Okay. So what I track personally is trading only. So it's based on how well did I follow my system. So we have a system that's based on our back tested data. So our entry would be a certain price with certain criteria, with a
Mm-hmm.
certain size based on our bankroll. So if I sized in properly, if I took the right entry, if I didn't get in too early, if I held it long enough, covered at the right point, then you'd receive 100% execution. But if any of those things are off, then you're deducting points for errors.
Mm-hmm.
I try to keep it, very systematic and unbiased, but that's difficult to do sometimes because you're grading yourself, right? So it's easier if someone else grades you. That's why we have group execution in the room. We do these polls so that we can grade each other and hold each other accountable, because your best, your most unbiased source is going to be another person. So that's where we try and find, that group effect, improving the execution as a whole.
Mm-hmm. Yeah, no, that makes sense. And so as a beginner trader, if I were to, or a beginner advanced intermediate trader, if I were to join your group, what can I expect from that group? What things do you have available for the trading community?
All right, good question. Our group has grown quite a lot this year, so we've improved our data tracking. We have Python webinars now, so you can learn how to do that. We have
Mm-hmm.
Excel webinars. You can learn how to track data, and we have templates that you can use. You can paste in your own data, and it will calculate the edges, the probabilities, and all of that stuff for you. We have a library of webinars on trader psychology, all of our setups. We share all of our historical data with the KVS database. So if you're into data, if you want to compare it to your own. So a lot of guys, what they do is they're already systematic traders and they just want to join to confirm their own theories,
Mm-hmm.
possibly add edges to their own strategy with what we have. But it also caters to complete beginners with no trading experience at all. You can come in, you can learn the strategies, you can execute them. And honestly, Richard, I find that traders with no experience do better in the room because they don't have as much baggage or, bad programming to kind of
Mm-hmm.
unlearn. When they come into the room, they don't know anything else. So they just follow the rules so strictly. Whereas people who've been in a few rooms, they have all these ideas, they overthink, they overcomplicate things, and they're always, trying to apply indicators and stuff when it's really so simplistic. And that's the beauty of these systems. You don't need to, overcomplicate things. Usually less is more. That's what I always say in the room.
Yeah, definitely. I know it's harder to it's harder to unlearn than actually learn for the first time, if that makes any sense. Like if you come with preconceptions of, this and that and that baggage, as you just mentioned, it's kind of hard to just unlearn all of that and then have to kind of learn a new approach. And it's like a rewiring of your brain. I do agree with you
Exactly.
on that. And so yeah, I mean, we're starting to run a little bit out of time. So to wrap
All
it
right.
up, what word of advice do you have for developing traders, or to those traders that are having a hard time during this changing market conditions?
Okay. Well, I think the biggest thing is to have an edge, right? Have a defined edge that works in all market conditions and respect that edge, right? And the best way of doing that is by executing your plan. I feel like a lot of traders, they sabotage themselves by trading differently, midday, they change their plans, they change their position sizing to make back losses. So just keep it as consistent as possible, respect your risk and your system, and just let the power of the edge come through. Don't try to force things.
Nice. Yeah, I think that's a great advice right there. So Kris, where can listeners hear more from you?
They can check out my website, krisverma.com, or they can check me out on Twitter. It's Kris Verma 88. I post there pretty much every day.
Perfect. All
Yeah.
right. So yeah, thank you, Kris, for being part of this first edition of Tradervue Conversations. I've really enjoyed having you here and also this conversation. And yeah, I hope to see you next time.
Thanks for having me, Richard.
Thank you, Kris.
Thank you for listening to another episode of Tradervue Conversations. If you really enjoyed our content, please support us by giving us a thumbs up, sharing, and subscribing.